USDC is the dominant stablecoin on their platform. There's about $5.5 billion of USDC deployed on Hyperliquid. That represents 95% of the platform's stablecoin supply. And on the flip side, that represents 7.6% of the USDC circulating supply. So there's a lot at risk for Circle.
Welcome back to another episode of Network Spotlight, the Mick and Mike edition. I'm Mick, that's Mike. It's great to start the week talking about stablecoins. It seems like that's been all the headlines these days. And we're going to talk about Hyperliquid. They are going massively into the stablecoin realm. We're going to talk about Athena. We're going to talk about Tempo and what that is. So a lot of news to get to surrounding stablecoins. So let's go ahead and start with this main story. Popular DEX Hyperliquid moves forward to launch proprietary stablecoin. I feel like this move makes sense just because when you think about traders and the natural use case for stablecoins, that's basically what trading is for. They use stablecoins many times. And so this move makes a lot of sense. But what can you tell us about the story?
Yeah, man, there's a lot of layers here. There's a lot at risk. There's a bunch of companies and stablecoin issuers going after this, and it's pretty interesting. We'll get to all that stuff, but Hyperliquid has proposed launching a USDH, which is what they call a Hyperliquid first, Hyperliquid aligned and compliant USD stablecoin. What is happening here is that USDC is the dominant stablecoin on their platform. There's about $5.5 billion of USDC deployed on Hyperliquid. That represents 95% of the platform's stablecoin supply. And on the flip side, that represents 7.6% of the USDC circulating supply. So there's a lot at risk for Circle. So essentially, Hyperliquid wants to launch its own stablecoin native to HyperEVM. They've invited a bunch of teams to submit proposals, and the winner will be voted on by validators on September 14th. And we've got some heavy hitters in the stablecoin space who have submitted proposals. So Paxos has been around for many, many years. They are offering strong compliance and significant revenue share with 95% of the interest going towards hype buybacks. Agora is a new player. They had a joint proposal with MoonPay. And they're kind of got this overall ecosystem where they've got their institutional stablecoin infrastructure. They've got Rain and their global, the card and on off ramp, and layer 0 for interoperability. They pledged to share 100% of net revenue, which is revenue minus the custodian's take for Hyperliquid. Frax got in the fray. They proposed 100% of the underlying treasury yield would be forward programmatically on chain to Hyperliquid users with a 0 Frax take rate. So they're not making anything. And one of the more interesting and maybe controversial ones was a company called Native Markets. So they proposed it's a little bit cloudy, but they proposed a meaningful share of its reserve proceeds to the Hyperliquid Assistance Fund. But they said that issuance would come from Stripe's Bridge stablecoin platform, and which caused a little bit of pushback from the crypto natives because Stripe is a centralized Web2 company, and we'll talk a lot about Tempo later on in this episode. Athena, I don't know if you want to pull up that tweet from Athena, which is a banger. They said, so essentially taken from Eminem's Stan, that they actually submitted proposals for USDH back in August. So they are likely formally going to enter the fray. So lots of big players in this space. And I mean, going back to the Circle, back in July, they announced native USDC on Hyperliquid. They clearly have the most to lose here, right? Even though they have native USDC, that's coming. Most, if not all, of is USDC on Hyperliquid is bridged over, and Hyperliquid wants something that's more native.
All these stablecoin providers, how are they viewing this competition? Is it more the merrier because there's obviously more interoperability that can happen and more business for everybody? Everybody wins, or are they trying to be the one size fits all and cream of the crop? Nobody else should exist.
What it looks like they're looking for is just one issuer to work with. right? One winner in this, and it's really interesting because there's a lot of this public discourse on, okay, our solution is better than others because of this. We're more decentralized. These are our strengths. This is what we're going to do. What we're seeing actually is how valuable this can potentially be for these issuers, because they're willing to forego all of this revenue, right? Like you see 100% of yields will go to the Hyperliquid reserve, they're with no take rates, and they're doing everything that they can to get this potentially massive distribution and eat into this chunk of USDC that is on Hyperliquid right now. You can see just this distribution. They're seeing that, okay, maybe this can be, we'll do this essentially for free, get this massive distribution, and then kind of down the road be able to grow their brand, grow their supply, and then monetize a little bit later. But you can see that that Hyperliquid is a massive, massive fish.
Clearly, I mean, they also just recently hit an all-time high, and I mean, their volume just keeps increasing more and more. And
Yeah,
it correlates with the
exactly.
stablecoin volume going up.
And we talked about USDC. They have got so much to lose. And actually, you saw, I don't know if you go look at it, but Jeremy Allaire, CEO of Circle, kind of shot back a little bit, saying don't believe the hype on a tweet. But like USDC, their business model is more supply, which means more. Just essentially, they're getting all the yield from the U.S. Treasuries that are backing. It doesn't share any of this yield with any partners except for Coinbase, which they are heavily dependent on for distribution. And we're looking at, and their business model is very much predicated on these yields of treasury, right? And the market is kind of saying that the interest rates are likely to get cut. Jerome Powell has come out saying that he's reassessing the situation. We're expecting a bunch of rate cuts coming, which decreases Circle's profit. So very tentative business model, and they've got a lot to lose with this Hyperliquid native stablecoin bids and proposals coming in.
Do you see the government potentially aiding? Like, would they be more likely to support USDC and trying to make sure that they become the clear-cut winner here? Or do you feel like the government is supportive of the fact that there's just, all of this competition that is starting to unfold?
I don't really see the government getting involved at all. I don't think they're going to play any direct role in it. I think indirectly, we've gotten here because of all of the changes in Washington that has really helped accelerate the adoption of stablecoins.
Yeah, I would agree with you. I think as long as they are compliant, then I think the government, that's pretty much all they care about. Meanwhile, I do think that competition is good for the market. Yeah, I mean, look, if somebody else can offer a better solution, then, the more the merrier, right?
Yep. Hyperliquid is going to make a ton of money out of this. Whoever wins this bid, they're going to have a ton of supply increase, and yeah, there's gonna be a kind of snowball effect where you'll see that protocol get a lot more business and a lot more supply hit the market.
Want to touch on Hyperliquid real quick because I'll be honest, Mike, I did not see that train coming at all. I think it snuck up on a lot of people. When they first launched, I would say that it was probably one of the few successful launches in crypto. We talked about last week how the crypto IPOs are showing us up, like how to IPO. I did not see it, and I missed that train. And, I'm, as an investor, like, you don't ever want to think like FOMO, but man, that's one that I'm like, I wish I could take back.
It's a great story, but I think it's more of an outlier story than anything else, right? You've got this team that was able to build for many years without bringing in venture capital money, right? That kind of brings in this lore of, they're allowed to do things that are, to really be decentralized, like truly decentralized in terms of distribution of their token, and they built a really great product, right? Like I think perp dexes are ones that dominate in volume. They built a really great product, and still that market size is huge because a lot of that, perps are dominated by centralized exchanges. So they are the big decentralized version of those. So there's still room to grow. They've done everything really well. And yeah, it's extremely valuable ecosystem.
Meanwhile, Mike, Athena is also quietly doing some stuff on the stablecoin side. MegaEth launches a native USDCM stablecoin with Athena to subsidize sequencer fees. What can you tell us about this story?
Yeah, I wouldn't call Athena quietly doing anything. They're kind of in all over the news. And, like we just talked about them potentially, likely being including a bid in the Hyperliquid proposals. And yeah, so they just recently partnered with MegaEth to launch USDM. So this is pretty cool. I like this because MegaEth will use the yield from USDM to cover sequencer costs. And that's a pretty innovative way of using it, right? Like you can't distribute the yield to token holders. Like in the Genius Act, that is not allowed. And I think eventually that will change. Hopefully that will change. But so what they're going to do is instead of, typically L2s will charge a markup on their sequencer operating costs to make a profit. But what MegaEth will do with this Athena issued stablecoin USDM is that they will use that yield from that stablecoin to essentially fund the operating expenses of the sequencer. So they won't kind of take any profit from operating that sequencer like normal L2s. This keeps transaction fees low, and more stable. Kind of aligns the chains and the ecosystem incentives by running the sequencer at its cost. So pretty smart, innovative way of using yields to benefit the ecosystem instead of just distributing those profits to eventual token holders. MegaEth's not live yet, but I think it's a pretty cool kind of, I want to say circumventing of the Genius Act and those requirements, but smart way of still being able to benefit users and token holders.
Yeah, I guess you are right about them not being quiet because Athena jumped 12% after treasury firm StablecoinX secures $530 million investment. So you're right. They're making headlines all over the place.
So yeah, so StablecoinX, they've now raised almost $900 million for their ENA digital asset treasury company. So this is interesting. They're that is looking to acquire ENA tokens, which is the native token of the Athena ecosystem. So they'll use the funds that they
Real quick,
raise.
Mike, DAT, just for those that may not be familiar, DAT is a digital asset treasury. Is that
digital
correct?
asset treasury. Correct. Yeah, sorry about that. Yeah, so StablecoinX are going to use the funds that they raised, right, almost 900 million, to purchase locked ENA tokens from a subsidiary of the Athena Foundation. The subsidiary will then use those funds from StablecoinX to buy spot unlocked ENA tokens from the open market. Okay. So, so that's a bit of a pump, right? But then stablecoins purchased ENA tokens, like I mentioned, are locked. So any sales following, so they're going to do a SPAC in Q4, like any of the sales of those tokens will be subject to a veto from the Athena Foundation. Essentially, there may not be any sell pressure, like, ever, maybe. I guess I don't know what the vesting schedules are for those locked tokens.
Yeah,
purchased by
it can't be
stablecoin forever. But like, I don't know when those, when that veto, what the details of that veto is. Yeah, it seems like is a nice little pump coming. No, not financial advice, but the way this is structured is for a while, at least through StablecoinX, there will not be any token sold, any ENA token sold, and I let go in the market.
Okay. I'll have to look at StablecoinX a little bit more carefully, but yeah, it sounds interesting.
Yeah.
More stablecoin news.
Yeah.
We've got.
Let's keep it rolling.
Matt Huang tweeted out, introducing Tempo, a payments first blockchain incubated by Stripe and Paradigm. This kind of got the community, like Ryan from Bankless. Yeah. We know that he's like a big ETH maxi. He's like, why an L1 rather than the L2? Like the Bankless guys, like they're pissed. And that's a representation of really the entire like Ethereum ecosystem. because many of them were banking, no pun intended, on the fact that you're going to get these institutions coming in, building L2s, and that's just going to help Ethereum. But a lot of these institutions, Circles, Arc, Tempo, which is by Stripe, they're saying not so fast. We're going to have our own L1. We want to be able to control our own fees. And that's ultimately what's playing out. Now, whether or not that's the right move, it remains to be seen, right? Look, Facebook tried to do the whole Web3 thing, right? And that did not work out for them. So that team got split up. They went into doing Aptos and Sui. So whether or not these will be successful remains to be seen. But this industry is built on narratives, right? If you want to know where the industry is going, if you want to know where to invest or what to look out for, you got to see the trend. And the trend right now, Mike, is that these institutions are not wanting to come on and build out these L2s and help Ethereum. They want to have their own chains.
Yeah. So, I think Libra, which was the Facebook chain back in the day, kind of walked while all of these other, permission, corp chains can now run. Definitely a different regulatory environment back then than it is now. But yeah, I think this is the similar argument, I think, of why successful applications like Uniswap, like Pudgy Penguins, launch their own L2s. Essentially, they own the end user, they've got the strong community, and then now they want to both optimize the chain for their use case. In the case of Uniswap is for trading, and capture more revenue and just have more control over their environment, right? Why pay all of these fees to the L1 that they can capture and do what they want with, whether that is in some form or fashion benefiting their community members, their token holders, or something else, right? They've just got more control. And you're going to see this more with what we call these purpose-built chains, that they're optimized for a specific use case instead of, and in this case, they're optimized for scale, where they don't have to depend on the relatively slow Ethereum L1 for finality, and settlement. So, look, I get it. I get, Ethereum want everything to be built on Ethereum. Ethereum maxis want everything to be built on Ethereum. I'm sure, Paradigm and Stripe, they're very more smart people there. They're recruiting a really, really sharp team. They've gone through all the pros and cons, but that, like I said, the market is the market. It remains to be seen. Can they attract the liquidity, right? That's one of the things that you got to weigh if you're not building on Ethereum. If you're doing your own L1, can you attract the liquidity? Maybe less of a problem, because Stripe's got so much distribution and they've got partnerships with so many different companies that maybe bringing in users, bringing in that liquidity is not that much of an issue for them. But I think maybe more important for crypto natives like you and me is this truly going to be permissionless and credibly neutral, right? If you have a chain that's built for a specific use case like payments, are you willing to open this up, one, to all the other activity that might clog up your chain, like meme coins, or even just anything else like DPIN or whatever it might be, right? Outside of payments, or even just normal DeFi. And will you allow competitors to use your chain, build other payments networks on top of your chain that might compete with you? You being struck, right? That is kind of the big question in my mind is, is it going to be truly permissionless and credibly neutral for anyone to use? And I'm leaning towards no, absolutely not, because they've got, Stripe has a specific use case in mind, and I think that they've done some good things in crypto, but I think they know how to operate in a very centralized manner, and they're very good at that. I got a feeling that's not going to be fully permissionless.
We'll
What do you
see,
think?
because Matt has something else to say about that. He does say Tempo will be a permissionless chain on day one. Anyone will be able to deploy a token, and anyone will be able to transact on the chain. He goes on to say that the plan for Tempo is to have permissionless validation and permissionless smart contract deployment, as well as permissionless usage. He says just like Bitcoin, Ethereum, Solana, etc. I mean, all those are obviously different in their own ways. So I'm not sure. I think there's a lot of words there that can be misconstrued and, flipped around there. So yeah, I don't know how permissionless it's going to be, because ultimately, if it's going to be fully permissionless, why else would you want to create it yourself and not just build on an existing one?
Control. Everyone says we don't need more infrastructure. We don't need more infrastructure. We don't need more infrastructure. I think that's misguided. I think that there are still optimizations that can be made to infrastructure. And I think that game is still being played out. I believe that. Look, I think Ethereum's great. I think that obviously Bitcoin is amazing. I think all of these L1s and L2s have done a great job to get us to where we are here. Are there other optimizations that could be made for specific use cases? Absolutely, and we're seeing that play out right now. And I'm not one who can predict exactly what's going to happen, because if you look at any other industry, AI industry, or just the cloud industry, like you've got many different players that have come and gone, and I think that companies have had leads for a very long time, and then they got usurped by new up and comers. So I think that there's still optimization to be made, and some of the smartest people in the world are building these things. So who am I to say that they shouldn't? Now, is that something that we're actively investing in? No, like, not really, right? Like we're more interested in the kind of the use case specific ones, and instead of kind of the general ones. But still, we believe that there's going to be still many L1s and general L1s and L2s being built. So we don't know, to be honest. We don't know how it's all going to shake out. We just think to find the best teams that are finding like specific problems that they're attacking, and those are the ones that are going to be successful.
Well, to your point, it looks like we do need more infrastructure, because there's plenty of infrastructure that's still securing funding, plenty of them. So let's talk about it, Mike. Every week you bring to us 3 different projects that secure funding. And this is a great insight into where the narratives are headed. And so that way, you as an investor, you as somebody that it works in the industry, or maybe you're a founder, you can have an understanding of what the future brings from a technology perspective. No financial advice, of course, on this channel, but it provides a lot of insights. So let's talk about Etherealize.
Yeah.
Tongue
So
twister there.
yeah, Etherealize. Yeah. So they're building Ethereum infrastructure specifically for institutions, right? So we talked about building more infrastructure. This is tweaking Ethereum infrastructure specifically for large institutions. They raised 40 million from Electric Capital, Paradigm, Vitalik, and the Ethereum Foundation. Obviously, big Ethereum supporters and heavy hitters there. So they're building privacy infrastructure, ZK privacy infrastructure for secure trading and settlement of tokenized assets, settlement engine optimized for institutional workflows, and just a bunch of developer tooling, APIs, and SDKs that integrate Ethereum into existing legacy financial systems without disrupting anything. So you're talking about like token transfers, smart contracts, staking, without blowing up, existing software. So the firm was founded by Danny Ryan, who was with the Ethereum Foundation for many years, and a Wall Street trader. So sorry, I forgot his name, Vidic something. Sorry, Vic. So a great team to really onboard institutions to Ethereum.
We've come a long way, Mike. I remember there was a time when we talked about ZK privacy. It was mostly around like retail users. And now we're talking about this being a solution for institutions. I mean, we really have come a long way as an industry.
Yeah, I mean that's we've been talking a lot about institutions, not just for privacy, but just overall for a very long time, right? And I think we're truly seeing just the highest level of interest of these large institutions, and and the benefits that blockchain and crypto can bring to their operations, and having them adopt different ways for their retail customers to get exposure to crypto. So yeah, it's really the industry really has come along.
Sticking with the L1 theme, let's talk about Kite, the base layer for the agentic internet.
Yeah. So Kite is an AI based layer one for payments. They raised 18 million in a Series A round led by PayPal Ventures and General Catalyst, with participation from Samsung Next, Vertex Ventures, and many others. I believe they built L1 on Avalanche, and it's kind of funny. Like I think with the Tempo conversation, like the Avalanche people, were like you should have built it on Avalanche. L1 on Avalanche, using subnet on Avalanche. So you're getting it from all angles, but yeah, so they enable autonomous AI agents to authenticate, transact, and interact with merchants using stablecoins for instant trustless payment. So again, you've got the AI plus stablecoin payment combination, but this is pretty interesting in terms of like they're actively targeting merchants, because I mean that's kind of like the everyday the everyday commerce that's happening with these merchants, and that's where we're going to see a lot of real kind of medium of exchange increase for stable coins. So yeah, they're looking at integrations with e-commerce platforms and finance platforms, and they've built some identity tools. They've built payment solutions for AI agents. So pretty interesting combination of the stablecoin meta and the AI meta.
Last but not least, Plural, unlocking investments in the electron economy. So this is like
That's cool.
renewable energy.
Yeah, that's a cool. I love that. I love that tagline. Yeah, so they are a renewable energy RWA protocol. They raised 7.13 million. I wonder if that means anything specific in the energy space. But this round was led by Paradigm, participation from Volt Capital, very apt there. Maven 11 and Neoclassic Capital. So they focus on tokenizing and facilitating investments in mid-sized renewable energy projects such as solar farms, wind farms, and battery storage. Essentially, they sit in the middle. This enables investors to participate in investing in these renewable energy projects, and it makes it easier in a compliant manner for these projects to raise funds to build out their solar farms. So yeah, you got some kind of deep in there, DeFi, and really being able to kind of accelerate the flow of investment to these projects.
When you think about renewable energy, I think that's a area that's still untapped because there's just so much emphasis on AI and you need all of this power to be able to power it. Naturally, people are going to start looking around and saying, what can we do to be able to have all this energy that is needed to source AI? Well, you need renewable energy solutions. You're starting to see a trend here, right? A lot of AI focus, but then in the background of that, you also are starting to see more emphasis on renewable energy.
Yeah, yeah. I'm really curious when the shit is gonna hit the fan with energy. You've got you've got all of these AI data centers being built. There's a ton of money being spent on propping these up. You've got just so there's so much energy going into AI, and like when are we going to kind of push up against that? Uh, yeah, that threshold, because personally, like my energy bills have gone up here in New Jersey like crazy, and I don't know what the downstream effects of that is, but like a lot of that I'm guessing a lot of that has to do, I'm sorry, upstream effects, a lot of it has to do with a lot of the energy being dedicated to AI. So yeah, I'm curious to see when we're gonna kind of hit the top there.
You put out a newsletter once a month covering a lot of these trends. So people can go to deepventures.io and sign up for the newsletter for that. And if you found this video helpful and informative, like the video, subscribe to the channel, and we'll see you guys in next week's episode. Thanks again.
See you, everyone.
If you're a founder or operator in Web3 and want to connect with others like you, head on over to networkspotlight.io and apply to become a member. See you on the inside.